Okay, welcome back, Fail Safe investors. If this is your first time to my page, welcome to Fail Safe Wealth. And if this is your first time watching any of my Battle of the Brands episodes, you are in for a treat. So if this is your first time to my channel, welcome to Fail Safe Wealth, where we pretty much do stock analysis, pretty much try to cover like everything financial when it comes to like dealing with stocks, stock analysis, when and sell a stock. I've pretty much covered everything, like how to evaluate a stock, all of that stuff through my channel. So take some time, go through the videos, tell me what you think. But this is a special video. This is a Battle of the Brands edition where I take two companies that I analyze separately, and then at the end of the week or like relatively close to the last or the second video that I'll analyze, I'll pretty much compare those two stocks head to head, ask myself three questions: growth, sustainability, and value, and see which one will come out on top. So like I said, this is a special treat, and I think you'll be proud of me on this one. So I don't want to tell you what company I'm about to pretty much walk you through, but I will say that you will be beyond impressed. So let's go. Let's go. Okay, so the company that we are about to look at today is Beyond Meat. So Beyond Meat, in my opinion, I will classify as a growth stock. And if you haven't seen the video that I did on how to analyze a growth stock, I definitely recommend that you go check that video out, and I'll probably leave a link to that video in the description down below or at the end of this video, but I don't want to like waste my time on that. So Beyond Meat, looking at it like a growth stock, like I said. Now, so we're gonna run through the basics of Beyond Meat, then I'm gonna tell you about the company, give you my opinion on the company and all that stuff. So Beyond Meat, ticker symbol BYND. It's selling for around $125 a share, roughly 125. We'll say $125 to $120 a share. Currently has a market cap of $7 billion, right? Since they have negative earnings, well, it's not too bad. They lost like 9 cents per share currently. So you won't see a price to earnings ratio, so you can't use that to evaluate this company. But this company has had a huge comeback from like the March low. So if you look at this company or was looking at this company before like the pandemic hit or pre-COVID and all that stuff, this company was selling for around that price pre-COVID, and then it took a huge dip to like 50, 60 bucks a share. And then now it's pretty much back up to $125 a share. So this company employs currently around 472 employees, but only brings in about $400 million in revenue. Now that's not a knock against the company, because since you only have like 472 employees, there have been some quarters where they've released positive earnings because, you know, low overhead. Now, if you don't know anything about Beyond Meat, Beyond Meat is pretty much a plant-based meat substitute. So you can get Beyond Sausage, Beyond all burgers, all of that. They do pretty much meat products that are plant-based, and they look like actual meat and taste like actual meat and all that stuff. So this is definitely something new, and this can disrupt an entire industry. And I did mention that if you're looking at a growth stock, you definitely want something that's kind of going to disrupt the industry that is going into. So kind of like Tesla. Tesla, yes, they make cars, but they make electric cars. So they're disrupting the regular combustible engine industry like Ford and GM and all those, and coming out with a new product, like a twist on a new product. So that's kind of how Beyond Meat is. And anywhere there is a new lane being created, there are definitely competitors. I will get into like the competitors that you can invest in for Beyond Meat in another video, but we're talking about Beyond Meat. So my opinion on this company as of right now, today, based on the metrics, meaning that they're negative earnings, they don't have any earnings right now, They're selling for $125 a share right now, which equals up to a $7 billion market cap. And you bring in $400 million. Now with the $7 billion market cap, there does mean that there is room for this company to grow, but they're not gonna grow with a $400 million revenue. So they're definitely gonna have to increase their revenue. Then with increasing the revenue, the profit's definitely gonna have to increase. And then you'll see the growth. You'll see a lot of investors piling in now. Now, I should mention that this company already has some big name investors and institutional ownership side. So they have JP Morgan and Vanguard. You know, a lot of people, of course, know JP Morgan, but Vanguard, if you're not used to like digging deep into companies, Vanguard owns, or not owns, but invests into a lot of companies. So if you see Vanguard, I'm not gonna say that, oh, that's a good thing. Like if you see Berkshire Hathaway investing into a company, then you kind of can put that stamp on it, but Vanguard invests into a lot of companies. And Vanguard also offers a brokerage account where you can invest with Vanguard, and they have their own ETFs and all of that stuff. But this is not any advertisement for Vanguard. I'm just saying, like, Vanguard, they do invest into Beyond Meat, so, you know, just so you know. But most of the shares of Beyond Meat are actually owned by people, the average retail investor. So with that being said, in my opinion, I don't see this stock going like on a tear anytime soon. I look at this stock kind of like Tesla. So Tesla was under $300 for years, I think a decade pretty much, for like 10 years, Tesla was in like the $200 price range. And then it shot up. So it's kind of like Beyond Meat. Like if you're buying Beyond Meat right now for $125, you're paying a premium on that stock. Meaning you're not gonna see the return that you probably want, because a lot of investors want that double, triple, quadruple return. You're not gonna see that return for a while. I would say probably 5 years. I'm calling it on this video, 5 years before you see Beyond Meat give the type of returns that you as an investor would like, meaning like double, triple, quadruple, and just straight to the moon from there, like everything. So yeah, if you're paying $125 right now with a $7 billion market cap and $400 million in revenue, yeah, you're pretty much paying a premium. Now that's not bad. I'm just saying, if you are investing into Beyond Meat, or if you choose to invest in Beyond Meat, just know what you're getting for your dollar. So you just have to know that you're not gonna see a return for a while. Now this is just my opinion, I could be wrong, but I'm calling it on this video, it will be a while. Now, the risk factors with Beyond Meat, since this is kind of like new technology or new product, if there is any bad publicity with Beyond Meat, saying like in a couple of years that it causes cancer or anything like that, that can pretty much finish a company like this. But if they can stay on the path that they're on, then yes, you pretty much, I'm not gonna guarantee anything, nothing's guaranteed in this world, but you can pretty much expect to see a return. It's just, are you willing to pay a premium? Now, me personally, I wouldn't buy this stock unless I can get it at probably $30, $40 a share. And that's not because I could afford to spend $30, I could afford to spend $125 a share, but I feel like I'm paying too much for what I'm getting right now. And I'm a long-term investor, so I'm always buying a stock for like what I see the potential is in the future. It's just that price for that company with no cash flow, yeah, I think it's overpriced right now, and it probably will be overpriced for a while. Now, that's not to say that it's not a good buy, because like I said, after 5 years, this company keep doing what it's doing and keep growing. It's like, it has to keep growing. If it keeps growing, yeah, you'll see a return. Easy. So that is what I think about Beyond Meat, but you know we can't end a video there, because I pretty much got to give you all the numbers, and I'm going to let you come to your own conclusion on if Beyond Meat is a good buy for you. Is it worth paying $125 today for that stock, or is it worth like waiting till a split happens? Like, don't wait for a dip. If you're going to buy Beyond Meat and you're set on Beyond Meat, as the company for you, then just start buying it. I would definitely recommend, like, okay, just buy it, pay the premium, and just continue to buy more. Build up your portfolio with Beyond Meat, if that's what you want to do, if that's what you choose to do. But do not wait for a dip, because it's not going to dip to the price. Probably not the price that you're willing to pay if you're analyzing it correctly and what you consider it to be worth or things like that. Because I could talk to someone else and they could probably say Beyond Meat is worth $300, $500 a share. And they could also possibly be right. So I'm gonna give you the financial statements, all three of them, the balance sheet, the income statement, and the cash flow statement. And I wanna hear your opinion on this company, so let's go. Okay, so starting off with Beyond Meat's balance sheet. So Fidelity listed that Beyond Meat brought in a revenue of $298 million, but Yahoo Finance says about $400 million, and the investors, and a couple other pages say it was like $400 million. So we'll just go with the $400 million number for 2019. The balance sheet for 2019 for Beyond Meat says that they had 270 something $million. I want to get that number right. A little over $270 million in cash on hand. Now, the current assets was $404 million, and the current liabilities was $48 million. Now, that is great. That's wonderful. Wonderful. So that right there proves that this company definitely is set up to grow. Definitely 100%. I would want any company I invest in to have a balance sheet like that. Believe me, any company. But it doesn't just end there. When we look at the total assets versus the total liabilities, we have about $452 million in total assets and about $68 million in total liabilities. So they have enough money to pay off all of their debt and still operate as a company. So that is a very, 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 very wonderful balance sheet. Now, let's look at the income statement. Okay, so when we look at the income statement for Beyond Meat, like I mentioned before, we're gonna go with the $400 million number for the revenue. Now, when it comes to net, that net is like negative $4 million. So they're like $4 million in debt, which is probably why they had a negative of 9 cents per share for 2019. So they owe money, they are in debt. Yes, but this isn't a really big company. You have 472 employees, so you could definitely weather the storm, in my opinion. And when it comes to capital expenditures, they had about $24 million for capital expenditures, but they have no free cash flow, so they don't have money to grow the company. Even though they have that $200 million on hand, they can use that, but usually that's kind of like a savings account for a lot of companies. A lot of companies keep cash on hand. It's kind of like, yeah, this is their rainy day fund. But I've seen a lot of companies that doesn't have enough cash on hand and could definitely use more. That's like all your bills for the month is equaling up $1,200 and your rainy day fund is $30. But that's just my opinion. I want to know what you guys think about this video. I want to know what you guys think about Beyond Meat. Is this something that you'll invest in? Is this like the new age form of companies to invest in? And then like everyone wants that next thing. And if I can't get Tesla, I'll just go for Beyond Meat, which is something that is different and it's environmentally healthy and all of that stuff. I want to know what you guys think, so leave a comment down below, hit the like button, hit the share button, hit the subscribe button, and to the next one, let's do it.